Well, Domain, of course, the property website that is owned by Nine, has released its September quarter house pricing report. Now, this reveals the median house and apartment prices around the country, and there have been some big shifts, I can tell you. Let's go through them, starting with Sydney. It's been the steepest downturn since the 1980s there, we don't have to tell you that, but it looks to be at an end, with house and unit prices jumping. House prices regained almost 1/3 and units roughly 1/5 of the price that was lost during the recent slump. Now, Melbourne house prices also see a rebound for the second consecutive quarter, jumping 4.1% during this period, marking the end of the steepest downturn in almost 2 decades. Brisbane, one of only 2 capital cities to record house price falls over the quarter and year, with unit prices falling 5.6% over that period. Now, Adelaide house prices slipped from last quarter's record high. Adelaide also made modest annual gains since mid-2013. Perth remains a firm buyer's market, though, with house prices 14.4% below and unit prices 18.2% lower than the 2014 record highs. The Domain senior research analyst is Dr. Nicola Powell. She joins me now for more from Canberra. Nicola, thanks for your time. What factors do you reckon have really contributed to Sydney and Melbourne bouncing back in the way in which they clearly have?
Good morning, Ross. Yeah, I mean, the rebound in Sydney and Melbourne has been pretty remarkable. Falling interest rates certainly have been one of those key drivers because it's improved that mortgage serviceability. We've seen that official cash interest rate cut 3 times this year. So basically it's cheapened credit and increased borrowing power for those buyers. And on top of that, we've also had a relaxation of those lending standards. So what that means is it's enticed buyers back into the market. There are certainly more buyers out there. On top of this as well, we're seeing those new listings shrink. So that increase in buyer activity is helping to absorb that build-up of stock that occurred during that downturn. And we have to remember as well, both Sydney and Melbourne, they have strong population growth, they've got strong jobs creation and a low unemployment rate compared to some of our other capitals.
Yeah, so Nicola, that's the interesting part about this, because it seems to be a real Melbourne and Sydney story. The rest of the country, though, it's kind of a different story depending on where you go.
That is true, but we have to remember that all of the other capital cities are also benefiting from these historically low interest rates and also that subtle relaxing of that lending. When you have a look at the other capital cities, what we are seeing, those that were declining are still declining, but that pace of decline has eased. And the other capital cities, some are actually recording some modest price growth. So if we look, say, towards Darwin and Perth, we know that they've suffered post that mining boom, but that pace of decline has eased. And Adelaide and Canberra, I always call them the quiet achievers of Australia. They're still recording modest price growth over the year for houses. And they've enjoyed, homeowners have reaped the benefits of 6 years of annual house price growth in these markets.
OK, Nicola, very quickly, just, shine up the crystal ball, have a bit of a look into next quarter. I mean, these Melbourne and Sydney price rises, will they keep going? Will that then bounce onto other capital cities as well?
I do think we'll continue to see price rises. I don't think they will be at the rapid rate that we have seen this quarter. So I do think it's going to be some time before we see that record highs again that we have seen some time ago in Sydney and Melbourne.
It's going to be interesting. Nicola Powell from Domain, many thanks for your time, and maybe just a little relief out there for some homeowners.